Hey folks, welcome back to the channel. Here is a SPY options update for week 20 of this year. I only made $63 for the week, which is not a very good return. And at the same time, the S&P 500 went up 1.7%. So this is what the graph looks like. The gap for the blue line is because I went on vacation. So I didn't do a lot of trading. I just sold some spreads, which I talked about last week, which all expired out of the money. And then not too much action for this week. So this was my trading for Monday, Tuesday, Wednesday, Thursday. I lost some money. And then on Friday, basically break even. And I'll go over some trades that I made on that day. But overall, $63 for this week. So this is the 5-minute chart for Friday. And I only made a few trades here. I didn't touch SPY until like 11:55. So that was right around here, because I noticed a triangle pattern and I was waiting for the market to break out of that triangle. So it was basically that line and this line here. If I zoom out a bit, you can see this bottom line kind of touches Thursday's time frame as well. So the market moved up and moved down, and it kept consolidating and getting closer and closer to a single price point. And usually when this happens, by the time these two yellow lines converge, the stock market should break out one way or the other. So I was waiting for that breakout, and that happened at, you can see here, 2:55 Eastern, so that's 11:55. So that's when I decided to go bullish here, because whichever way it breaks out of tends to go that way for the rest of the day. So here at 11:55, I bought 4 pairs of bull put spreads at 419, 418. As you probably know, when I'm bullish, I sell put spreads, but I usually go out of the money. But in this case, I was very bullish because I thought we were going to head up higher. Since the stock market did go up here, I thought we were going to finish today pretty strong. So if that was the case, then selling a 419 put, which is over here where the purple line is, that would earn a lot of money if the stock market were to continue going up. So this is an in the money put option spread that I sold, which means I would make nothing if the stock market closes below 419. So I was making a pretty big bet here that we were going to see a lot of upside. Unfortunately, of course, that did not play out. So what I should have done was just do what I usually do and then sell a put option out of the money at like 418 or 417 or something. Because if I had done that, you can see the stock came down, but never really went below the bottom of this yellow triangle. So I could have just held my short option all the way until the end of the day, and then it would have expired worthless because it expired above 418, and I would have kept all of the credit. But in any case, I got out of my position at 1225 here, and I even sold it for a little bit of a loss. That's a 4 cents difference there. And the reason I sold was because if I move down to the 3-minute graph, because it's easier to see, I was anticipating the stock to just continue going up, but you can see here it sort of formed a double top. It went up, down, and up, down again. And I thought, well, this is looking pretty bearish. So there's not really a high likelihood that the SPY would finish above 419. And if that's the case, then this option spread that I'm holding would be in the money, and I would have to close that position at the end of the day, probably for a loss. So I decided to get out early, and I was more bearish than bullish because the overall trend you can see for the day is still going down. Let's go back to the 5-minute chart. So we started the day up here, and then we're sort of going on a downward slope. So it was around this time, about 12:30, that I decided to sell my position and even go bearish. So instead of the 419 put option, what I did instead, as you can see here at 12:28, so a few minutes later, I basically bought this bear call spread 419, 421, meaning as long as SPY finishes below 419, then I would keep all of the credit and the option spread would expire worthless, which is what happened at the end of the day. Another trade that would have worked really well on Friday is over here. When the stock market was in this downward channel and it broke through, it went back to retest, but it fell. Right around here would have been a good time to go short. So for example, over here, if I sold a call spread at 419, I would have made more money than waiting till the near the end of the day to do it. But at this point, I wasn't sure the market was going to go down for the day because over the last few days, we've just been on this. This is over like a 3-day period. this very bullish channel. So I didn't want to prematurely get in because what if we bounce off of this channel bottom and continue going up? So I was kind of hesitant to go short over here. But as soon as you can see that it's having trouble getting back into this larger green channel, especially with this rejection over here, then that would be an indication that maybe this larger bull channel run is over. So that would arguably be a good time to short the market as well. And as you can see, it did not go past that level again for the rest of the day, which ends right here. So that's pretty much it for the trades. I also have a Google option that expired on Friday, but I rolled that over to next week. And the strike, I rolled from 120 to 121. And I was able to make a little bit of a credit from that, 26 dollars each for 2 of them. Now these are naked calls, so they're quite risky because if Alphabet continues to go up higher and higher, then this option would just continue to be in the money. So I'm probably going to continue rolling it if that happens. Otherwise, if Alphabet closes below 121 next week, then this would just expire out of the money. So in terms of where SPY can go from here, let's look at the 1-day chart. Overall, it looks like this channel is in play. We have SPY going up and down within the top and the bottom. Over here before it broke out through the top, but it failed, so it came back down. And that was followed by a similar projection down out of the bottom of the channel. So overreaction, too much buying, overreaction, too much selling, and then continued in here. So the next logical target that SPY will probably go to is up here towards the top of the channel again, which is about 427 or 428. And that's going to be 10 points higher than what it is right now. So I'm going to post another video tomorrow on the overall market and some warning signs that investors should know about, because those signs did previously help to identify this major correction over here, which I talked about in previous videos. So keep an eye out for that. Thanks a lot for watching. Good luck with your investments, and until next time.